Hello everyone and welcome to a new weekly market report for ATFX. My name is Gonzalo Canete and this is a summary of the last week events, macroeconomical data and market movement with the community that follow this channel, just to be sure that you are really properly updated about what's the most important factors that we're facing. In summary, the whole picture, now I'm gonna go into details, but the whole picture is, last week we confirmed that European macroeconomic data are not so good, are still showing contraction, economical contraction. I'm talking about the PMI index, the polls published during the last week for different countries, including Germany, Italy, Spain, but also European Union as a whole area. So contraction on the PMI, on the manufacturing and services index. This indicates that the economy in Europe is not going well. We also got a high inflation in Europe because it's, let me take a look, but it's 5.3%, I believe. Euro area, 5.3% exactly, with an interest rate of 4.25. Just think about this. The growth rate in Europe right now is 50.50. The inflation is 5.3. Interest rate is 4.25. Just with these three numbers, we got, as a matter of fact, two conclusions. First of all, money, interest, real interest rates in Europe are negative right now because inflation is above the interest rates as a reference. We also got the second factor, or the second conclusion, second point we can highlight based on these numbers is that European Union is getting into stagflation, as I mentioned in the previous report. I mentioned this in the previous report, and unfortunately we keep seeing numbers that basically prove that these conclusions are in the right way. The growth rate is so weak and slow. The inflation is still high, and the interest rates are not high enough to contain the inflation. It means like the monetary policy is probably, most likely going to continue rising interest rates. And therefore, in an economy that is getting slower, weaker, an increase of interest rates or contractive monetary policies cause, in general, worse situations. Let's say like make the things worse in general terms. And we can define this scenario of low growth or depression or recession plus inflation has a stagflation, one of the worst scenarios that an economy can face. And on the other hand, if you take a look to the numbers coming from US economy, we can see that inflation rate is 3.2%, not bad, almost there. The target is 2%, and they have been reducing the inflation massively month after month. Interest rate at 5.5%, which is, it's a good reference. Now in US, main difference with European Union is the interest rates are guaranteed. The real interest rate right now are positive. The interest rate are above inflation rate, therefore the money generates returns. The growth rate is 2.60% annualized and 2.10% interannual growth rate. So we clearly see that the situation between Europe and America is completely different. US economy is still having good numbers. Jobless rate is 3.8% in US. Europe is 6.40%. Why I'm insisting in this radical difference? Because we can see clearly how this US economy and European economy are going in opposite directions, and you can see this reflecting on the dollar index. During the last week, the dollar index was rising almost to 105 points. That levels are the levels we were watching in the last bull trend we saw during the summer, and particularly are getting close to the levels that we faced by the end of last year, 2022, when the dollar was completely crazy, rising strongly against all currencies to the level of 114.25 on the dollar index. We saw during those days, how the euro dollar was losing the parity with the dollar. We saw also, let's take a look. We saw also how the yen, dollar yen, was going to the levels we didn't see in 30 years, 150, about 150 on dollar yen. You can see clearly here how we were losing on September 2022 the parity, and we were going below the one on euro dollar index. What else? We also can analyze here dollar yen. Look, this uptrend is exactly in line and going to the targets getting at the end of 2022. Last year, when the dollar yen was almost 150 yens per dollar. Now, during the last week, we touched 147.70, almost 148. So we are in line to go to the last targets get during the last year. In terms of equity, let's take a look on the Standard & Poor's index and to NASDAQ. I got this ugly figure here because it's obviously it's a bearish figure, shoulder head shoulder, and if we consider that the Standard & Poor's didn't show any proof or evidence to break out the 4,600 points, sorry, as a maximum, recent maximum, and the last time we are facing this is still in line with what it looks like a kind of bearish pattern, a shoulder head shoulder. We need to be really cautious and careful. First of all, we got a gap live last week between 4,400, 500 to the new levels built this week. But coming back to the last week review, as you can see, was dropping the market massively. One of the reasons the market was dropping massively is because still the US numbers are that good. The monetary policies probably are not going to change, and we most likely, if the numbers are still good, and this is the thing, labor market is still super strong in US. If the numbers are still good, it means like most likely Federal Reserve going to keep rising interest rates, perhaps one more time this year, 25 basic points, moving the interest rates in US almost to the levels of 6%, which is a record that we have reached in 2001. We also reached those levels in 2008. So get ready because Mambo is coming. If that level is reaches again at 6%, it means like liquidity problems could hit the market, and then we could see another crash. Anyways, the situation right now is the one market was dropping during the last week, as you can see. It was in line with other different markets. I mean, if we take a look on NASDAQ technology, it was also dropping, as you can see. Less than the Standard & Poor's, obviously, but still dropping. And if we go to Europe, last week was a disaster for Europe. It was DAX 40, DAX Cetra in Germany was dropping to the minimums of 15,600 points. Even the minimum level we faced during the last season, it was 15,572 thousand points on DAX. In terms of Spanish index, I got this one here too, and I'm following closely. 5 times already we touched those levels on the top. It means like still European market shows a clear lateral movement for the last couple of months. Is the end, in my opinion, is the end of the bullish movement that started by the beginning of the year. As you can see here, 1, 2, 3. All of these 3 impulses didn't break out the maximums in the Spanish index, but it's exactly the same thing happens in the German market. 1, 2, and 3. These three impulses, the last one, this one, is just given as a result a very long lateral movement. And I believe as long as we stay in this movement, in this lateral movement, as long as we keep in this lateral movement, as more probably it is that we drop through 13 levels like 15,000 points. You see? And that's only considering a natural correction. I'm not talking about even a proper correction, which is the whole movement. From the beginning of the movement, if we follow the Elliott wave theory, just 50% of the retracement could take you to 40,500 points, and so on. Okay, what else? Let's take a look also to Bitcoin and oil. Because one of the important news we heard during the last week, it was also the oil market. Russia and Saudi Arabia agreed to postpone or extend the contention on the offer, on the oil offer, in different sense. In the case of Russia, they compromised to reduce exportations during the month of August, and what we heard last week, it was they're gonna postpone or extend that contention on the exportations until the end of the year. In the case of Saudi Arabia, the compromise was to reduce the production of oil during the month of August, just to exercise pressure on the oil market. They say basically they confirm they're gonna keep reducing the oil until the end of the year, and that has provoked a movement, bullish movement, an uptrend on the oil prices. We're gonna check the prices now. I was just mentioning the oil prices before I go to Bitcoin. Let's go to oil prices. You can see here that we reached about $90 per barrel on Brent oil, and still I think at this point we got certain symmetry done with the previous channel. So therefore we should keep an eye on this, because any correction on the price at this level will be completely natural. A breakout about $91 per barrel, it's not really, I mean, I would say it's unlikely to happen in the coming days, or at least during this week. I believe it's a strong market. It's a lot of stress, but the movement was caused by political decisions by Russia and Saudi Arabia, not really by any market force. And therefore, I think we're gonna probably see that this price is getting colder the coming days. And why not? Yeah, maybe in the coming weeks is attacking again those levels, $91, and go to the next target, close to $100 per barrel. But that will happen in the coming weeks. I don't believe that we're gonna see immediately that movement. And on the other hand, probably we will see a contraction on that movement, just a natural correction on the price, getting colder and coming back to certain levels like $88 per barrel. That will be a very natural movement. Going back or still in commodity related with dollar, really close to dollar, we also got the gold market dropping. Right now it's in $1,925, but last week it was also dropping from $1950, $1955 to $1914. The reason why gold was dropping, I explained this many times already, is anytime we see the index, dollar index is getting stronger, the dollar in general terms is getting stronger, the economy is going well in US, and therefore the monetary policy is going to keep strong in US. It means there is no reasons to keep reserves in gold, and without reasons to keep your reserves in gold, you usually sell your gold and keep your reserves in dollar, which is the main reserve currency. So this, from a fundamental perspective, makes a lot of sense, and is a natural movement. That's why I believe that if we still see on dollar index those kind of movements pushing up to 105, 108 points, definitely the gold gonna keep getting colder and colder, and getting even eventually going to the levels of $1,865 per ounce, or even lower, $1,800 per ounce. So again, this is a natural movement. And summarizing, the last week was a bearish week for the gold market, because the dollar was getting super strong due to the bad numbers in Europe and good numbers in US, which is unbalanced the relation of risk between Europe and US, between euro and dollar, in favor of the dollar, obviously. Yeah, and the last one, Bitcoin. We can see a Bitcoin that is getting flat right there. Right now it's losing like 26,000 points. It's $25,430 per Bitcoin. But still it's an asset for buy and hold. It's still a very, very interesting asset to keep on your portfolio, in my opinion. Remember, this does not constitute any kind of advice. I'm not here to tell you what to do with your money. I'm just sharing with you my view on the markets, on the certain assets, and this is the case. In the case of Bitcoin, I believe that Bitcoin is a good asset to hold on your portfolio in long term, obviously, and still is an asset that's going to reflect very well any kind of uncertainty or risk on capital markets. It doesn't matter if it's equity, it's bonds, it's even the current Forex market. Doesn't matter, any risk reflecting on the main assets, dollar, 10 years treasury bond, gold, all of these assets that are stable and strong. If they get in weaker, it's gonna play in favor of Bitcoin. That's what I believe, because Bitcoin, it's supposed to be a kind of solution for the current monetary system in the world. That's all from my side. I hope you enjoyed this market report. I tried my best to give you a short and close view of what happened last week and what was the consequence on the prices on the market. And I hope to see you next week with another report. If you like this one, please thumb up, and also leave your comments so I can read it and adjust the next reports to your requirements. Okay, have a good week. Take care. Bye bye.